Hey investor friends, I'm Michelle Markey, and today I'm going to talk about how with a Roth IRA everyone can become a tax-free millionaire with just under $17 a day. And this would be like, instead of spending $17 a day on lunch, you could be contributing this money to a Roth IRA instead and growing it tax-free to lead to $1 million in 20 to 30 something odd years. And you could also become a millionaire with a traditional IRA, but I think that you'll just end up paying a little bit more in taxes in the long run. And I'll also talk about who I think the Roth IRA is best for and who may want to choose something else. But either way, I think that all roads lead back to the Roth IRA, and I'll explain why. If you want to achieve financial freedom and retire early like I do, I'd love if you could please like and subscribe to my video and YouTube channel, because it greatly helps out with the YouTube algorithm and because I'm here to help you and myself achieve our financial goals. Thanks. As long as you have earned income or taxable compensation from either a salary, wages, or self-employment income or other types of earned income, then you can contribute to either a traditional IRA and or a Roth IRA. Doesn't mean you can't contribute to both, but you can't exceed the annual maximum that you can contribute to both types of accounts or just one of the accounts if you choose to. And if you don't know anything about a traditional IRA or Roth IRA, I encourage you to check out one of my videos where I explain the differences between them. Or you can also pause right here to look at this chart about the benefits and the eligibility considerations and other requirements that go along with either having a Roth or a traditional IRA. And if you'd like to understand more behind why I believe that all roads lead back to the Roth IRA, feel free to check out this video on why I think the Roth IRA is better than the traditional IRA or the pre-tax 401k, and even the Roth 401k is not great because of this rule called required minimum distribution. And the thing is, only the Roth IRA doesn't have this RMD requirement, so you're actually ending up having to pay way more in taxes the bigger your nest egg is if you have it situated in a traditional IRA, a pre-tax 401k, or a post-tax or Roth 401k. As a retirement investment account, a Roth IRA tends to be best for those of us who are in the lower income tax bracket, or also known as young people usually, and also if we have a modified adjusted gross income, or also known as MAGI, of under $125,000 a year if we're single, and under $198,000 if we're married filing jointly in the tax year. And the other person that I think it's good for are those who are over 50 and want to do catch-up contributions, where you can contribute $7,000 a year instead of the rest of the young people at $6,000 a year. And those are who I think it might be best for. On the converse, a traditional IRA might be best for those who have more income because there's no income limits and you don't have to deal with being phased out of your contribution amounts with the Roth IRA if you contribute to a traditional IRA. And the IRA situation can get a little tricky if you're married and if each spouse is making over $99,000 a year on average and they exceed the amount that can be filed jointly at $198,000. Then it may not be as ideal to live with your spouse. If you're married and can live separately and not live together with your spouse throughout the year, you then can enjoy the benefits of filing as if you were single at under $125,000 of a Roth IRA contribution limit. And otherwise, articles like this one from Investopedia suggest that maybe a traditional IRA might be better for some of the deductions you might be able to get while being married. So look into this more if this applies to you. And the other thing I wanted to remark about in terms of marriage and retirement investment accounts is that the way the current system seems set up is a bit unrealistic, because if you are married and filing separately and live together with your spouse, you can only contribute up to $10,000 to $0 to your Roth IRA. So I feel like that's a little bit unfair. It almost makes you have to be filing jointly if you both make up to $198,000 to maximize the Roth IRA contributions. And if you're making more than $99,000 on average each person, then you're better off being almost like a single person who files separately and doesn't live with the spouse, or if you're a single mom as the head of household and you have a child or more, and then if you have a MAGI of up to $125,000, then you can contribute the full $6,000 a year to your Roth IRA. So all in all, it just seems super confusing if you're married and make way more money than the current amounts allow for. You may be wondering if your MAGI is within range of the ability to contribute the max to your Roth IRA, and to explain what the MAGI is comprised of, you would take your gross income, which is usually your wages and dividends and interest or capital gains and other types of income you may have had, and that's your gross income for the year, or the total revenue you as a person may have earned during the year. And then you figure out your adjusted gross income, or AGI, based on taking out some certain tax deductible expenses. And this could be some qualified business expenses. So you reduce the gross income by your qualified expenses that can be taken out, or if you've had charitable contributions. And there are some other things that you can take out to get to your AGI. And then to reach MAGI, you have to add back certain deductions to your AGI. And a lot of these deductions are not very common, and they could include things like passive income that you got from rental properties. And there are some other conditions to check out if you have to add them back to your AGI to get to the MAGI. But for a lot of people, their AGI will be equal to their MAGI. So for a lot of us, we don't have to worry about anything more than just figuring out what our AGI is. To boil down all this MAGI, AGI, mumbo jumbo, I quickly filled out an example IRS 1040 form to get you a gross income of $75,000. And let's say this person contributed $100 to charity. Their final adjusted gross income ended up being $74,900. And then let's say you take the standard deduction of $12,400. That gets you to the taxable income of $62,500. And I just want everyone to note that the taxable income amount is what lets you know what your income tax bracket is and what you'll owe taxes on, but it's a different number usually than what your AGI is. So if you're currently maxed out from being able to contribute directly to a Roth IRA because you have a MAGI of over 140K if you're single, or a MAGI of over 208K if you're married filing jointly, and you don't mind some of the obstacles that the IRS puts in front of you, and you don't mind paying some taxes, then I think a backdoor Roth IRA conversion, or also known as just a Roth IRA conversion, is the answer, where you first put in your contributions in a traditional IRA, or you can even put it into a Roth 401k, because neither of those two have income limits. And then as long as you pay your taxes on these contributions, you can then roll them over into a Roth IRA. And I feel like that's the best solution to the income limit situation. And the other points I just want you to keep in mind is, I think that it's a little bit more convenient if you roll it from trustee directly to another trustee. So let's say I have a 401k or a traditional IRA at one brokerage firm, and then I roll it over to another one. I would fill out the form in order to send it over to the other brokerage firm where my Roth IRA is, and then let them handle it, rather than having them issue you a check and then within 60 days you have to roll this over by depositing that. And I feel like that could get a little messy if you either forget about doing it, or it gets lost in the mail, or something else happens and you just forget about it, and then the IRS might end up taxing you on the distribution of that amount from the other account before you put it back into the Roth IRA. So I think it's best to avoid this situation by just having your one trustee brokerage account send it to the other trustee brokerage account where your Roth IRA is. I hope everything I said so far about the Roth IRA makes sense to you, because there's a promised land of becoming a tax-free millionaire if we invest consistently, and if we get lucky with the stock market and earn these kinds of rates of return over the long term. And judging by how the stock market's historical average rate of return has been anywhere between 7 to 10% per year, I did some compound interest calculations with this handy dandy calculator you can use on the internet. And I put in, if we initially start with $6,000 and we contribute $500 a month, or which is what brings us back to the earlier part of this video when I mentioned that with just under 17 bucks a day or $16.44 a day, you contribute this amount, and that equals being able to contribute $6,000 a year every year. And we earn on this contribution 7% per year. Based on this, in 37 years, we'll be able to have $1 million. So if you start investing at age 18, by age 55, you'll have $1 million, or 25, you have to wait till 62, and at age 30, if you started then, you'd have to wait till 67 to reap the benefits of having $1 million in your Roth IRA. And the other examples are, if we bump that up to the upper limit of the historical stock market's average rate of return of 10%, then it will only take us 30 years. So that's a saved amount of 7 years that we don't have to be as long as invested. If we start at age 18, we can have $1 million by 48, 25 by 55, and 30 by 60. And best of all, if we're able to do even better than the stock market's average rate of return, and if we're able to achieve 15%, which is pretty great, then we save another 7 years, and we only have to be consistently invested for 23 years, and then we have $1 million and even more. And if we start at age 18, then we reach this point at 41, and if we start at 25, we get there by 48, and at age 30, we'll reach that point by 53. And no matter which pathway you choose or when you start investing, you can see that with a combination of some persistence and some luck, we can all achieve $1 million. And the only thing to keep in mind is that we need to have had our Roth IRA open for at least 5 years before we can take any withdrawals when we're at least age 59 and a half, where withdrawals become tax-free and penalty-free from a Roth IRA. Otherwise, there could be some tax penalties if we take it out before age 59 and a half. And also if you haven't had the Roth IRA account open for at least 5 years. And also make sure that if you're rolling over some funds from either a traditional IRA or a Roth 401k, that it needs to have been in the Roth IRA for at least 5 years before you can take that amount out as well. I don't know about you, but I'm looking forward to becoming a tax-free millionaire someday with the discipline of maxing out my Roth IRA and my Roth 401k that I'll eventually roll over into the Roth IRA so I can continue generating tax-free returns on my tax advantage retirement account investments. And if you enjoyed this video or learned something, please like and subscribe, and I hope you become a tax-free millionaire too. Till next time.